Welcome. You're viewing the video version of the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for June 5th, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.60 rose from 1.39 last week, advancing within bullish territory. The total count of securities in bullish or bearish patterns decreased 1% to 2,813. The count of bearish stocks decreased 10%, while the count of stocks in bullish patterns increased 5%. The Pirls PNF market breadth summary chart shows us a market now 2 consecutive weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 164 points for the 12th advance in 16 weeks, at a positive 215.15 points. It has risen above the November 2014 high and continues below the 5 remaining highs above plus 100 and continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 0 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. Now at 100.20, the CCI 20 daily fell from 201.46 last week. At Tuesday, 5/31 close, it had 6 days above zero for a change in Woody's trend to long, but is not yet within the plus or minus 50 range for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 5 weeks ago, while the daily CCI 20 began a Woody's uptrend last week. Having begun a Woody's uptrend 4 weeks ago, the CCI 20 weekly rose to 105.94 from 85.79 and from a positive 15.23 at the zero-line reject pivot within the plus or minus 50 range 4 weeks ago. We will continue following the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top and bottom 5 industries are positive. Summary: tech on top, oil, banking, and some tech on the bottom. Bullish, semis, and disk drives continue in the top 5. Oil continues in the bottom 5. Oil services has entered the bottom 5. REITs has left the bottom 5. Bearish, KBW Bank has left the top 5 and entered the bottom 5. Comp Tech has entered the bottom 5. Brokers has left the top 5. Gold and silver have left the bottom 5. Focus this week from www.sovereignman.com This financial bubble is 8 times bigger than the 2008 subprime crisis. The warnings about the imminent sovereign debt crisis collapse are coming with greater frequency and certainty, as well as less time left to soften the blows. Some key points in this clearly worded piece by Simon Black are the following. On July 1, 2015, the chairman of then-President George W. Bush's Council of Economic Advisers told a reporter from CNBC that, quote, "We've never had a decline in house prices on a nationwide basis. So what I think is more likely is that house prices will slow, maybe stabilize, might slow consumption spending a bit. I don't think it's going to drive the economy too far from its full employment path, though," end quote. His name was Ben Bernanke, and within a year he would become chairman of the Federal Reserve. Of course, we now know that he was dead wrong. When the bubble got into full swing, lending practices were so out of control that banks routinely offered no money down mortgages to subprime borrowers. But the biggest subprime bubble of all is the negative interest loans being made to sovereign governments. All over the world now, there are governments that are issuing sovereign bonds with negative yields, and many of these governments are totally bankrupt. Japan's debt is so high, in fact, that it takes 41% of government tax revenue to service. Even in Italy, one of Europe's most notoriously and hopelessly bankrupt countries, the government bonds have negative yields. Negative yield means that an investor who loans money to government will get back less money than he invested once the bond matures. In other words, the government is getting paid to borrow money. Now they're just paying subprime governments to borrow based on a misguided premise that governments will always pay, just like Greece. The key difference is size. At the peak of the housing bubble 10 years ago, there was about $1.3 trillion worth of subprime mortgages in the financial system. That $1.3 trillion bubble was enough to bring down several major banks and cause cascading damage across the global financial system. Today's bubble is 8 times the size of the last one, with more than $10.4 trillion worth of government bonds that yield negative interest. And what's even more concerning is how quickly it's growing. So this gigantic sovereign bond bubble where governments are being paid to borrow money has practically doubled just in the last several months. It's clearly a disturbing trend, the proverbial powder keg in search of a match. And when future pundits write the history of the financial crisis to come, whether it happens today, tomorrow, or years from now, you can bet they'll wonder how the entire system failed once again to see something so dangerous and so obvious. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary bull bear point and figure market breadth summary chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a productive and prosperous week coming up, and wishing you true success.